Welcome back to another video with us at EDU-Tutor. Today we want to look at principles of accounts, paper 2, May or June, right? And this paper has 5 questions. The first one says Yahim, a sole trader, owns a printing firm called Yahim Printing Services. He has been recording his accounting information manually. Yahim intends to hire a bookkeeper to assist him with incorporating a software program into his business to make his workload easier and to improve his accounting system. We should identify one accounting software that Yahim can use to help him improve the business. In this example, I gave you 3: QuickBooks, Microsoft Excel, which we're both familiar with, right? And I gave you an additional one, which is Sage. All right. In your exam, you would select the one that you're most familiar with because in an exam, you might not think of the others. We should identify one skill a bookkeeper should possess. We have problem solving, mathematical skills, detail oriented, time management, and I'm sure you can think of others. Then it proceeds to say the following table shows transactions that were omitted from the books. Using the table above, right, we're going to record those transactions in the general journal. And it goes on to say that narrations are not required. So let's do the first one. 2022, 2nd of April. Bought goods on credit costing $400 from our True. Alright. So we bought goods on credit. So we know that we're getting the goods coming into the business, that is purchases. We're going to debit purchase to show that goods are increasing. And we're going to credit our True to show that liability is increasing. So therefore, we have 2nd of April, purchases, we're going to debit it, and the folio is general ledger. Now remember that we have 3 ledgers. We have general ledger, purchases ledger, and sales ledger. Purchases ledger, those are for your payables. So all your creditors go in your purchases ledger. Sales ledger, those are for your receivables. So all your debtors go in your sales ledger. And general ledger is for every other account. Therefore, we're going to credit accounts payable, which is R through, and we must indent the account for the account that we're going to credit, and it's $400. Let's scroll up back. For the 8th of April, we sold goods valued at $600 on credit to the new moon. This time we're selling goods, so this person here would be a receivable, and it's $600. So you're going to debit U Moon to show that the asset U Moon, the receivables account, would be increasing, and you're going to credit sales to show that goods are decreasing, and goods is an asset. So when goods decrease, you must credit. So here we have it on the journal, or in the journal, the 8th of April, U Moon. U Moon is a receivable or a debtor, so it is found in our sales ledger, and it's $600. For the sales, we're going to credit sales, so we indent, and sales is found in our general ledger for $600. Next, we have 12th of April, U Moon returned $50 worth of goods. U Moon was a receivable, and he's returning some of the goods. So we're going to go to our journal. When goods come back into our business, that is called return inwards. And we know that that is an increase in assets, so we have to debit return inwards, which is found in our general ledger. U Moon is a is a receivable, and we find that in our sales ledger. So we credit U Moon, we indent also, and it's $50. 18th of April, received an invoice from BVIC for goods worth $4,000 less a trade discount of 33 and 1/3%. And we know that 1/3 is also equal to 0.33. So in your calculator, you can put $4,000 multiplied by 33.33, and that will be, sorry, I said wrong thing. $4,000 multiplied by 0.33, and that will give you 1,333.2. Then you subtract that from the $4,000, right? And you will get 2,667. So you go in your general journal on the 18th of April. You will show that you're going to debit purchases to show that you bought goods, right? And it's going to be 2,667. It is our general ledger, and BVIC is a payable. So we find him in our purchases ledger, and it's the same $2,667. Let's go back up. 19th of April. Goods returned to El Son. These goods had been invoiced at $120 less a trade discount of $20, 20%. So I just showed you how to do it with getting the discount and then subtracting it. In this case, I'm going to show you another way. So instead of having multiplying 120 by 20%, we're going to find 80% of 120. And that will give us the figure that we need to put in our journals. So in this case, 120 multiplied by 80% will give you 96, right? So this is a figure less the discount. So anytime you want to find a figure less a discount, you put the rest of the percentage in your calculator. So instead of 20, we put 80. Remember, there is 100 as a whole. So if we have 20 as discount, the other 80 must be what we collect. All right, so in this case, goods are being returned to Elson, right? So in this case, the goods are leaving our business to our supplier. So this is called return outwards. We normally credit return outwards to show that goods in the business, which is an asset, is decreasing. And when an asset decreases, we credit. All right? And therefore, we will debit Elson. And that is what we do here. 19th of April, Elson, we debit him to show that the amount that we owe to him is decreasing. And we credit returns outwards to show that our goods is also decreasing. And that is our general ledger. Then it says identify the source document that was issued for the transaction on the 19th of April 2022, and that is known as a debit note. So let's look at 19th. So 19th of April, goods were returned to Elson. That's the one that we previously just did, right? And once goods are being returned, the source document that will be issued is the debit note. All right, C. The following information is available for 3 of the employees of Yahim Printing Services. The first employee, Leila. Leila's annual salary was agreed at $84,000 for the year ended April 2023. Yahim has agreed to give her a 2% raise on her annual salary for the new financial year ending the 30th of April 2024. We should calculate Leila's monthly gross earnings for the new financial year ending the 30th of April 2024. So what you will go ahead and do is to find the 2% raise that Leila should get on her salary. So what I did, or what you should do, is to multiply $84,000, which is her pay for the year before, by the 2%, and then you add it to the $84,000. Or you could simply have done $84,000 multiplied by 102%, which would give you 85,680. Now you need to find the monthly gross wage, right? So we have monthly. So we're going to ask ourselves how many months are in a year, and that is 12. So now you need to divide the total pay by the 12 months, and you're going to get 7,140. So therefore, Layla's monthly gross wage for the 30th of April 2023 is 7,140. Now, this is another way that you can work this question. Some people will choose to find the monthly salary. So they take the pay from last year and divide it by 12, and that will give them $7,000. Now, if you multiply the $7,000 by the 2%, which is the raise, you will get what her new pay will be for each month, right? So we have $7,000 multiplied by 2% plus the $7,000 will give us 7,140. Or if you want to go the shorter route, you say $7,000 multiplied by 102%, and that will give you 7,140. So there's no one way to do a mathematical equation or to do accounting, right? Once we go to get the same answer. So Samson is paid $30 per hour. Yahim has contracted him to work 35 hours per week. For the week ended the 30th of April 2023, he worked 49 hours. Overtime is paid at a time and a quarter. We should calculate Samson's gross wage for the week ended the 30th of April 2023. So let us look at the first thing that you should do when you get a question with overtime is to calculate the basic pay. The basic pay would be the 35 hours that he should normally work, I should say, multiplied by the $30, which he is paid per hour. And that gives us $1,050. You're going to subtract the hours he actually worked. So you minus his normal week from the hours that he actually works. So that gives us 49 hours minus 35. So we have 14 hours that he worked overtime. Now you're going to calculate his overtime pay. So his overtime pay would be his 14 overtime hours multiplied by the $30, which is his normal pay, multiplied by the 1.25. And in this case, I put 1.25. So we know that a quarter is equal to 0.25. So 1.25 would be 1.25. So if you put this in your calculator, you will get $525. So therefore, his total wage now would be equal to his basic pay plus his overtime. So therefore, we get 1,050 plus 525, which is equal to 1,575. Then we have Dolly, who earns a basic salary of $3,400 per month. In addition, she is paid a commission of 2% of the amount by which the revenue of the business exceeds $40,000 per month. For the month of April 2023, the company's revenue was $58,000. We should calculate Dolly's gross pay for the month of April 2023. So this is commission-based pay, right? So we start with her basic salary, which is $3,400 per month, and we're going to find how much money in excess did the company revenue was the company's revenue. So we subtract the $40,000 from the $58,000 and we get $18,000. Now, they said that we should calculate 2% on the excess. So it is 2% of $18,000, which will give us $360. So therefore, Dolly's gross pay would be equal to her basic salary plus her commission. So that's 3,400 plus 360, which is equal to $3,760. It says state two types of compulsory deductions that are normally deducted from an employee's gross pay, and in this case, I listed income tax and national insurance. Now we move on to question 2. Nylock is a computer consultant. She provided the following information below about her cash book for the financial year ended the 30th of April 2023. So here we get a cash book, and I'm going to scroll down so that we can start working the questions. The first one says state the meaning of each of the balances on the 1st of April 2023. Balance BD in the cash book, so that's I. So let us look at balance BD in the cash book. So in the cash column, I should say, the balance BD in the cash column is $450. So when you have a balance BD at the start of the month or at the start of the year, you will know that the previous year or month would have ended with $450 in cash. So in this case, I said that there was a cash balance of $450 at the start of the year, or I can say that the last year or the last month ended with $450 in the cash too. All right. Balance BD in the bank column. So let us look at our balance BD. So this is our balance BD over here in the bank column. Now, once balance BD in the bank column is on our credit side, that means that there is an overdraft, right? Which means that the business took more money than it had in the bank account. And in this case, it is $5,600. So I would have said that there is a overdraft. So there's an overdraft of $5,600. Then it says state whether NILO consultancy services allowed or received a discount of $1,500 on the 15th of April 2023. So let's look for the 15th of April 2023. So here it is. We have all Mayoris, $1,500 under the discount column and $18,000 under the bank column. So this means that which one of them do we credit? Is it discount allowed or discount received? We credit discount received. We credit discount received because it is a revenue, right? Therefore, we would have received discounts. So that's what I put. I put discount received. Full stop. 1 mark. State two reasons why the check for ADF PLC may have been dishonored on the 9th of April 2023. Again, we can scroll up and look at it for ourselves. The 9th of April 2023, we sent some money to ADF and $6,000, but it said dishonored check. Now, reasons for dishonored check would include a stale dated check. So the date on the check, it was too far. So maybe it was past a year or 6 months. Error on the check. So maybe the recipient's name or the business name was not spelled properly, or insufficient funds in the payer's account. So maybe we didn't have enough money at that date. It says states the reason for 2 entries on the 28th of April 2023. So let's look at that. 28th of April, we have cash in details. and we debited bank $14,500. When we check the cash side, we see 28th of April. We debited, we credited cash $14,500 and the details is bank. So here we see a contra entry, correct? So we see a contra entry, and we know that that is when either we take money from the bank and hold it as cash, or we take money from the cash deal and put it in the bank. All right, so what I said, being that we credited cash and debited bank, I said that cash was placed or deposited in the bank, and this is known as a contra entry. C says calculate the percentage discount on the 12th of April 2023. All right, so let's look at the 12th of April 2023. We have Booker Center Limited, $5,000 discount and $245,000 bank. So to calculate that, we would have the $5,000, which is the discount, plus the $245,000, which we collected, plus the $5,000 multiplied by 100, right? And that gives us 2%. Now you can check your answer. How do you check it? Find 2% of $300,000, and if you get $5,000, then your answer is correct. Suggest a reason why Nyla Consultancy Services had to refund K Lima on the 29th of April 2023. So again, you go up to your cash book, 29th of April 2023, K Lima refund $1,600. Now, K Lima previously bought goods on credit and the discount was $250. Sorry, bought goods from us. Discount was $250 and it was $20,000 worth of goods. So it could have been an overpayment, right? So maybe we overcharge the customer or the customer made an overpayment. It says calculate the yearly interest that Nyla Consultancy Services would have to pay for the bank loan shown on the 10th of April 2023. So we notice that we're not finished. So it's on the what did we say? 10th of April 2023. So it's a 12% bank loan of $60,000. So we should calculate the interest. So we find 12% of $60,000, and that would be 7,200. So that is the yearly interest for Nyla Consultancy Services loan, bank loan. All right, so now it says calculate the balances in the cash book for the 1st of May 2023, and we should state whether they would be debit or credit balances. Simply put, they're asking us the balance of the cash book. So let's do that. All right, so if you add the cash book, so the cash column, we would have 450 plus 16,000. So 450 plus 16,000 would give us 16,450. Under our credit side, we would have 14,500. When we minus 14,500 from 16,450, we'll get 1950. And we know we put our balance CD on our credit side because it is the side with the smaller total. Correct. All right. Now we work with our bank section. 20,000 plus 60,000 plus 245,000 plus 14,500. Let us check what that would be. So that is 339,500. That's 339,500. And when we subtract, sorry, on our credit side, I should say, on our credit side, we have 5,600, 200, 6,000, 18,000, and 20,000, 1,600, and 250. So we add all of these figures. You can pause the video and add them just to be sure, and we would get 51,750. All right, so you can pause the video and check. Now, when you minus 51,750 from 339,500, we will get 287,750. That is our balance CD on our credit side, since it is the side with the smaller total. Now we go on our debit side, and the balance CD will turn balance BD for the first of the following month, which is May, and it is 1950 for cash and 287,750 for bank. All right, so let's look at the questions that they give us on this aspect. So they asked us for the balance BD in the cash column on the 1st of May 2023. That was 1950. The type of balance, both balances were on the debit side. Balance BD in the bank column was 287,850, and it was also on the debit side. So it says complete the following accounts in the books of NILOC Consultancy Services for the month of April 2023 using the information in the cash book on page 8. Close each account at the end of the month. Alright, so we should complete K Lima's account. Let us look at K Lima's account. Alright, so we have K Lima purchasing goods from us, $20,000 for the bank, $250 for discounts on the 4th of April. So we have to put that in our K Lima's account, right? And then we gave K Lima a refund on the 29th of April, 1,600. Let's see how we do that now in our account. All right, so the first thing that you would do is to show that. So we have a balance BD of $50,000. When she took goods, or when she purchased goods from us, we would credit her account. So she was making a payment to us. Sorry. She was making a payment to us, so we would credit her account. So we credit bank of $20,000 on the 4th of April. We will also credit her discount allowed because we gave her that incentive, right? For the refund, however, we're going to debit. So we debit this 29th of April, 1,600. And then we're going to balance off the account. So we have 56,000 and 1,600 on our credit side. So that gives us 57,600. On our credit side, we have 20,000 and 250. So that gives us 20,250. 57,600 minus 20,250 will give us a balance CD of 37,350. And that is the last day of the month. And in this case, it is 30th of April. You total both sides. So you will add $56,000 and $1,600 again. You get 57,600. And you have to check this side to ensure that it is balanced. So 20,000 plus 250 plus 37,350 should give you 57,600. You can pause the video and ensure that these are correct. If not, please comment below. Also, please remember to subscribe, like, and share to someone who will need assistance or who is sitting exams this year and would like to watch this video. On the 1st of May, balance BD, would also be 37,350 because balance CD becomes balance BD on the first of the following month, right? And it should always be the same figure. So the second one that we're going to do is discount allowed. So you scroll back up, you look at the discount allowed. In this case, we allow 250 to K Lima and $5,000 to Booker Center Limited. So we're going to record those now in our ledgers. So let's look at discount allowed. When you allow discount, you debit the discount allowed column because the discount allowed is an expense. So on the 4th of April, K Lima got a discount. K Lima is a customer, so it's found in our sales ledger and it's $250. So 12th of April, Booker Center Limited got a discount of $5,000. We balance off the account, so 5,000 plus 250 gives us 5,250, and there would be zero on this side because you would not have balance CD here, right? So 5,250 minus zero give us a balance CD of 5,250 on the 30th of April. You total both sides, so it's a 5,000 plus 250 gives you 5,250, and you only have 5,250 on this side, so it is also equal to 5,250. Your balance BD will become your balance CD will become your balance BD on the 1st of May, and it is 5,250. Number 3 says the following information is available for Chevron Manufacturing Company. All right. So they list some items, but I'm going to read the instructions first, and then we come back to the items. Use the information from the table on page 12 to answer the following questions. Identify 2 examples of direct costs used in the manufacturing of the product. So let's just look for the items in the table. We have raw material inventory, work in progress inventory, finished goods inventory at the 1st of May 2022, and then we have it at the 30th of April 2023. So we know that the earlier date would be our opening inventory, so that's for O, and our closing inventory would be those at the later dates. All right, so we're looking for direct materials. That's what the question said we should look for. Sorry, direct costs. So I'm going to call out the items. And while you're watching the video, I want you to indicate whether you know which ones are direct costs. So we have sales revenue, purchases of raw materials, factory wages. So 60% of the factory wages are direct and the rest are indirect. Royalties, returns inwards, carriage inwards, rates and insurance. The rates and insurance are to be apportioned 4-1 between the factory and the office. And general expense, $3,500 apportioned to the office and the remainder to the factory. All right, so you should hear the direct costs in there. So in this case, I want to ask you, what are the 3 direct costs that exist in a manufacturing company? These are the 3 direct costs that always exist. That exist in a manufacturing company. Now you will have to look in your question to see if any of these is not present. So in some instances, royalties will not be there, but that is a direct cost. So the 3 direct costs in a business are direct materials, which is raw materials, direct wages, and royalties. Identify 3 examples of indirect costs used in the manufacturing of the product. And they would have made sure that they told us some of the items that are indirect. So they said that some of factory wages is indirect. They said that we have rates and insurance, and they also said that we have general expense. So those are indirect expenses in the business. Using the form on page 15, prepare the manufacturing account for the year ended the 30th of April 2023 for Chevron Manufacturing Company, showing clearly the cost of raw materials consumed, the prime cost, total factory overhead, and the production cost of goods completed for the year ended the 30th of April 2023. All right, so let us do our manufacturing accounts. All right, so you know that the first thing that we need to do is to ensure that the account is headed up, so it is. So you start with your opening stock of raw materials. In this case, our opening stock would have been this $23,000, right? And you know we're going to add purchases next, so you can pick up the purchases figure at the same time. In this case, it is $306,000. This here, so I don't lose you. $306,000. Where is it? So we picked up the 23,000, and we had our purchases of raw material of $306,000. You would look in your question to see if there's any carriage inwards. In this case, there is. So let's look for a carriage inwards. Carriage inwards here of $2,000. All right. So we pick up that. Now you always add carriage inwards to your purchases. So $2,000 plus $306,000. If you put that in your calculator, or if you know what it is $308,000. 308,000 plus 23,000 will give you a cost of raw materials available for use for $331,000. Now, some students say that they have it hard to remember the manufacturing accounts. However, if you look at it carefully, you will notice that it's very similar to your profit and loss or your income statement, where you have purchases, opening stock plus purchases plus carriage inwards and minus returns outwards will give you cost of goods available for sale. So it follows the same pattern. So there's no reason for you to not be able to remember, right? It follows the same pattern. Now we're going to list closing raw material. So we will go back up and look for the closing raw material. In this case, we said that it's the one with the later date. So our closing raw material is $33,000, which we got here. Following? Hopefully you're following. All right, where are we? So we have $33,000. We're going to subtract our $33,000, which is our closing inventory, from our cost of raw materials available, and we get $298,000. Now it's time for us to add our other direct expenses. So you would be looking for direct labor or royalties, because we said that there are only three direct costs in a manufacturing company: direct material, direct labor, and royalties. So let's just look if we see direct labor and royalties. All right. So here we see royalties, and that is for 17,000. We also see direct labor. It says 60% of factory wages are direct. So we're going to find 60% of 123,000. So go ahead and put that in your calculator. 123,000 multiplied by 60%. All right, so 60% of 123,000 is 73,800, and we said that royalties is 17,000. So we're going to add these two direct labor. We get 89,800, 89,800 plus the $298,000 that we got up here will be 388,800, which means that that is our prime cost, but because it is all of our direct expenses. Now we're going to find our factory overheads. And we would have answered a question previously that asked us what are our factory overheads in the question, and we said that it was indirect wages, rates and insurance, and general expenses. But they also gave us some notes on these items. So let's look for the notes on them. So firstly, they said that factory wages, indirect expenses would be the 40%, since 60% of it is direct, so the rest must be indirect. So we can find 40% of 123,000. So go ahead and find 40% of 123,000 for me. So that is factory wages. So let me see. You should get 123,000 multiplied by 40% will give you 49,200. Then it says that rates and insurance should be apportioned in the fraction 4 to 1, in the ratio 4 to 1. Now, when you have a ratio, you know that you add the two numbers or the three numbers, any amount of numbers that they have in the figures, you're going to add them together. So 4 plus 1 give you 5, that is your denominator. And in this case, 4 of it should be factory and 1 of it should be administration, so office. So we are only concerned with the 4. So 4 over 5, so 4 divided by 5, or 4/5 of $45,000 is factory overhead. All right. So 4 divided by 5, right, which is 0.8, multiplied by 45,000 is equal to $36,000. So $36,000 of rates and insurance is overhead. Yes. So general expenses now, it says that $3,500 is apportioned to admin or office, and the rest is factory overhead. So 14,000 minus 3,500 would be for factory overhead. So let's do that. 14,000 minus 3,500, and that is equal to 10,500. So that is for overheads. So now we're just going to put those figures into our question. So we got 10,500 for general expenses, $36,000 for rates and insurance, and 49,200 for indirect wages. We add these three factory overheads together and we get 95,700, and we add it to the 388,800, which is our prime cost, and we get 484,500. Next step is to add opening in work in progress. So let's pick up both our opening and closing work in progress. So opening work in progress is 14,000. Closing work in progress is 29,000. So keep that in memory or in your mind. So we're going to add opening work in progress. So that's 14,000. When we add 14,000 to 484,500, we get 498,500. We're going to minus closing in work in progress. So that's 29,000. And in total, when we subtract 29,000 from 498,500, we get a production cost of 469,500. And you know you normally double underline that figure. All right, so that would be our manufacturing account. So once they say prepare a manufacturing account, you stop at production cost. You don't go any further. All right. So we did B, I. So now 2 says calculate the net sales figure. Net sales would be equal to sales minus returns inwards. And in the question, sales revenue was 658,500. We got a return inwards of 1,600. So net sales is 658,500 minus 1,600. So put that in your calculator and ensure that the figure that I have is correct. I have a total of 656,900. Then it says Chevron, the owner, paid $2,300 for insurance. This amount covered the $1,200 insurance premium on Chevron Manufacturing Company and the $1,100 insurance premium on Chevron's family house. The accountant credited the bank account with $2,300, debited the insurance expense account with $1,200, and debited the drawings account with $1,100. Which principle is that concerned with? I have the business entity concept or it's a separate entity concept. So that says that The owner's expenses cannot be recorded as the business expenses because those are different, right? The business is a total different entity from its owner. The accountant did not make any entries in the accounting records for orders received for the goods to be supplied in the next financial year on the 13th of May 2023. We should identify the accounting principle the accountant has applied, and in this case, it's the accruals concept. What we're receiving here, orders received, that means that we got the money for some orders, but we have not yet supplied the goods to the customers. So this is what a prepaid revenue, and a prepaid revenue would be under the accruals concept, right? Or revenue recognition. Brooklyn Stahl is the owner of two businesses, Brooks Technologies and Brookie Computer Supplies Limited. Brooks Technologies manufactures components used in the production of computer monitors. The forecast for the sales of the computers during each quarter of 2023 are presented in the following table. So you can look at the table for a short while, but I normally discuss the table after I've read the question. So Brooklyn policy is to maintain a closing inventory sufficient to cover 25% of the next quarter's sale. So closing inventory should always be equal to 25% of the next quarter's sale. The opening inventory for the components on the 1st of January 2023 will be $1,500, or 1,500 units, I should say. We are supposed to prepare a production budget for each of the first two quarters of 2023 for the components. So we have production budget. You start by laying out the type of budget that you're going to do. You need your dollar signs. All right. And you start with sales. So sales was given to you, right? So let's look for sales. So for the first quarter is 6,000, for the second quarter is 8,000. So we just put those in our production budget, 6,000 and 8,000. We should add closing inventory, which their total should be 20% of the following month's sales, right? So we're going to find 25%, I should say. So that's 25% of the following month's sales. So for the first quarter, we're going to find 25% of 8,000. For the second quarter, we're going to find 25% of 12,000. So 25% of $8,000, if you put that in your calculator, you should get 2,000. 25% of $12,000 should be 3,000. That gives us what is available for sale, which is $8,000 for quarter one. So 2,000 plus 6,000 gives us 8,000. 3,000 plus 8,000 gives us 11,000. Now we're going to less open inventory. Now open inventory for the first quarter would have been 1,500 units because they said that the open inventory for the components on the 1st of January 2023 is 1,500 units. So we subtract 1,500 from 8,000, we got $6,500, 6,500 units for quarter one, and 2,000 would be our closing in open inventory for quarter two, because the closing inventory for quarter one would become the open inventory for quarter two. And when you subtract 2,000 from 11,000, you will get 9,000 units. Then it says two, the selling price of one component is $65. The cost of producing one component is $50. We should calculate the markup applied by Brooks Technologies for a component. Now, markup percentage is equal to gross profit divided by cost price multiplied by 100. Gross profit in this case is 65 minus 50, and we notice that there's $15 profit. So 15 divided by the cost price, which is $50, multiplied by 100 gives us a markup of 30%. On the 31st of December 2022, Brooklyn discovered the following errors in the books of Brookie Computer Supplies Limited. Error A. The balance of $12,436 for office furniture was recorded in the ledger account as $12,364. Alright, so I normally read the instruction first before I go any further. So let's read this part. Complete the following table by putting ticks in the correct columns to indicate the effect of the errors on the non-current assets and the profit for the year. And one was done for you. So error A was done for you. And remember, we just read what error A is. Now, if you incorrectly put the amount for office furniture in your books as a smaller total, because in this case it's 12,436 minus 12,364, right? It would have been less. So in this case, office furniture is a non-current asset. So of course it's going to have a effect on non-current assets. It's going to understate it because it was less than it should have been. And it would not have any effect on profit because non-current assets are not in your income statement. Now let us look at the next error, error B. An item of capital expenditure had been recorded as a revenue expenditure. So capital expenditure is any money used to upgrade a non-current asset or to buy a non-current asset. So if capital expenditure was recorded as revenue expenditure, it's going to understate our non-current assets and overstate our profit. Why? Capital expenditure is used to upgrade non-current assets, right? So the value of the non-current asset would increase if it was recorded properly, but it wasn't recorded properly, so it was less than it should be. It was understated. For profit, however, it was recorded as revenue expenditure, so revenue expenditure was overstated, right? While it should revenue should have been less than that amount. Error C, an item of capital expenditure had been overstated in the books. So if capital expenditure was overstated, that means that non-current asset is overstated because we said that capital expenditure would increase the value of the non-current asset. And it would have no effect on the profit because non-current assets are not recorded in the income statement. Identify two payment methods that Brooklyn can use to pay suppliers of Brooks Technologies for tools purchased on credit. And I listed some payment methods here where we should be familiar with these: credit card, debit card, check, bank transfer, cash, right? So there are various ways that you can pay customers. Brooklyn maintains a full set of books of accounts. A purchases ledger control account and a sales ledger control account are prepared at the end of every month. We should state two uses of control account in the accounting process. So I have to check the accuracy of the double entry system to help you find errors and to correct them, and also to summarize your ledgers. Alright, so the following balances were extracted from the books of Brookie Computer Supplies Limited on the 30th of April 2023. Refunds to trade receivables 1400, contra items transferred to purchases ledger 550, bad debt 700, and interest charge on overdue accounts 2600. We're supposed to record the balances above as they appear in the sales ledger or the receivables control accounts. If a customer gets a refund, it is debited to the sales ledger, right? So we normally credit when the money is going out of the business and debit the receivable account. Contra entry item transfer to a purchases ledger. We're going to credit the purchase ledger, right? So we credit the purchase ledger. Bad debt. Bad debt is an expense. And bad debts we usually credit it for the sales ledger. Sales control account. So if we're transferring purchases, a contra item to a purchase ledger, we're going to credit it to show that the receivable account is decreasing, and that's 550. Bad debts is going to decrease the receivable account, so it's a credit entry. Interest charge on overdue account is going to increase the sales account, or the receivables account. So it's going to be a debit entry. So, all right, so the following is a list of some balances which are extracted from the books of the Caribbean Teachers Cooperative Credit Union for the year ended the 30th of April 2023. Now, in this case, as I said, we're going to read the rest of the question first before we work. So it says use the following form to prepare a statement of corrected surplus for the Caribbean Teachers Cooperative Credit Union for the year ended 30th of April 2023. So before we can do that, we need to read our notes. The following adjustments had not been taken into consideration in arriving at the surplus for the year. A. The built-in insurance expense has not been adjusted for a prepayment of $500. B. Motor vehicles were not depreciated for the current year. The policy is to use the reducing balance method at the rate of 25% per annum. And C. The Board of Directors decided to transfer $12,000 to the Education Statutory Reserve Fund. Alright, so now we're going to start working the question. Remember that you start with your surplus because that is what we're going to correct. So the surplus was 75,900, which we can find. Let me see where we picked up that. Here, 75,900, right? And we're going to look for any adjustments. So anything that will decrease or increase the surplus. Let us check in the notes firstly. So it says the building insurance expense had not been adjusted for a prepayment, right? So the following adjustments had not been taken into consideration in arriving at the surplus for the year. The building insurance expense had not been adjusted for prepayment. So you know that normally what you would do for prepayments would be to subtract the amount from from the figure for the year, right? So we subtract the prepaid amount from the total figure. In this case, we put the total figure. So now we need to go ahead and subtract the figure. But in this case, all right, we already subtracted the full figure from the profit. So we subtracted too much money. We subtracted too much money. So now we need to go back and add back the $500 to the profit, right? So remember that expenses are subtracted from profits originally. If we have a prepayment, we should not subtract the prepaid amount from the profit. However, we did subtract the prepaid amount of $500 from the profit, so we need to go back and add it to the profit. So that's why in this case, we're going to add this prepaid insurance expense back to the profit. All right, so we say add prepaid insurance. Then it says motor vehicles were not depreciated for the current year. The policy is to use the reducing balance method at the rate of 25% per annum. So when you're using reducing balance method, you have to look for any provision for depreciation. In this question, we have motor vehicle at cost for 140,000, and we have provision for depreciation on motor vehicle of 20,000. So before we can multiply it by the percentage, we have to subtract the $20,000 from it. So we get $140,000 minus $20,000 multiplied by 25%, which will give us a depreciation of $30,000. So that is what we're going to subtract from our surplus. So we say less depreciation of $30,000. This is our total adjustments because the other item is the board of directors decided to transfer $12,000 to the Education Statutory Reserve Fund. We know we normally do that in our apportionment account. So this is where we're going to put that. So negative $30,000, which is the minus less depreciation, plus the 50,000 is going to give us 29,500. And in this case, it's a negative 29,500. So our corrected surplus for the year would be 75,900 minus 29,500, which gives us 46,400. All right, so I cannot hear what your questions are. are, but you can always comment below if you have any issues with this aspect. But off of my head, I can tell that somebody is out there asking me, where did I get this negative $30,000? So I previously worked out depreciation up here and we got $30,000. We said that we less provision for depreciation is $20,000 from the cost of the asset, which is $140,000, and then we multiply by the 25%. We got $30,000. Yes, it was a positive $30,000. But when you less something, you subtract, right? If you were supposed to put 500 plus $30,000 in your calculator, it would be wrong because this is a negative $30,000, being that we're minusing, right? So that is where we get 29,500. This is positive and this is negative. So we get 29,500. The corrected surplus for the year is 46,400. All right, so if you have any other questions for this part and you want to ask a question in the comments so that I can explain, you can go ahead and do that. Use the following form to prepare a statement showing the apportionment of undistributed surplus for the year ended the 30th of April 2023. The Board of Directors decided to transfer $12,000 to the Education Statutory Reserve Fund. So we just worked out the surplus for the year at 46,400. Remember, this is where we did it, 46,400. All right. We're going to less apportionments, and the first one that they told us to less is the Education Statutory Reserve Fund. So we less it $12,000, giving us a total of 34,400. You're going to look in your question to see if there's any undistributed surplus for the year. We have undistributed surplus for the year for last year of 33,400. So we add that. So add 33,400 to the undistributed surplus for the year 34,400, which gives us a total undistributed surplus carried forward to the next year of 67,800. All right, any questions, please remember to comment below so that I can answer them. All right, lastly, use the following form to prepare a classified statement of financial position in the order of permanence for the Caribbean Teachers Cooperative Credit Union as at the 30th of April 2023. You're going to start with the name of the business, Caribbean Teachers Cooperative Credit Union, and the date. So that's what we did here, statement of financial position. You're going to list your non-current assets. In the question, we have, let us look at it. So we have building at cost, $220,000, motor vehicles, $140,000. We remember that we have a depreciation for the year for motor vehicles of $30,000 plus the $20,000 from the year before. And we also have investments, that is a asset. So it's 83,400. So let's put those in our statement. So we have built-in $220,000. We don't have any depreciation, so our net book value is $220,000. Motor vehicle of $140,000. We had $30,000 depreciation for this year and $20,000 depreciation for last year, which gives us a net book value of $90,000. Our investment is $83,400 with no depreciation, so its net book value is $83,400. When we add 220,000 plus 140,000 plus 83,400, we get 443,400. Depreciation column is 50,000 and net book value is 220,000 plus 90,000 plus 83,400, which gives us 393,400. Next, we work with our current assets. So we're going to scroll back up and look to see if we see any current assets. All right, so we're going down. Membership fees dues, those are revenue outstanding. So revenue owing, that is a current asset. Short-term loans to members, that we can look at as an account receivable, right? So we soon collect those money from our members. All right. Bank balance is also a, right, it's also a current asset. So we're going to look for those. All right, so we have short-term loans to members, 301,900, membership fees due 15,000, and prepaid expenses of $500 plus our bank balance of 40,500. Where did we get the prepaid expense? In the notes, right? In the notes, we got our prepaid expenses in the notes where it says that $500 of the insurance expense was prepaid. Right here. We worked with that a while ago. We total our current assets, we get 357,800. We need to less our current liabilities from our current assets. So let's look for our current liabilities in the question. All right, so our current liabilities are accrued expenses. So it says accruals 4,400 and members' deposits repayable at a short notice. So we have to repay our members. So it would be a liability for us at a short notice. So it is a current liability of 20,000. So we add our current liabilities together, we get 24,400. We subtract it from our current assets of 357,800, and that gives us a total working capital of 333,400. We add our 333,400 to 393,400, which is our total assets. That gives us 726,800. Now we're at our capital and reserve section. So this 726,800 is known as our net assets, and that is our balancing figure. So now we need to ensure that our capital and reserve section balances as well. So we're going to go up for our share capital. Share capital. So let me draw a line from share capital to its amount, 557,000. Right? So $557,000 is our share capital. That is where I put it. I'm going to look for education statutory reserve to see if any was there for last year. So we have an education statutory reserve of 90,000, and this year we put towards it in the notes, we put 12,000. So 90,000 plus 12 will give us a total of 102,000. We're going to add undistributed surplus, which we worked out for the corrected surplus form, and we worked it out to, the apportionment form, we worked it out to 67,800. So we're going to add that figure to our education statutory reserve, and we get 169,800. Now 169,800 plus 557,000 will give us 726,800, and that balances our balance sheet, right? So that means that we're correct. All right, so that was a lot. If you have any questions, please remember to ask them in the comment below. And thank you for watching. Please like, subscribe, and share this video to someone who might need it. All right, bye.